Hi, everybody. Hope everyone's doing great this evening. It is Angelina. I know you guys are like, where have you been? Well, been working on some projects that have taken up a lot of time, and I really want to get on. I was introduced to this gentleman I think it's shown on my right. And so I really wanted to get him on to talk about some things. We have the pleasure of having Jon Buerkert on. He is VP of Lending at Guaranteed Rate Mortgage. And guys, he has some awesome things that he's going to talk about, and I'm going to let him take the stage, and we're going to go through it. Hey, Jon.
Hey, Angelina, thank you for the invite, and I'm happy to talk about some of the products. Before I dive into, some of the ways in which I help clients get financed and how we assist with cash to close and some of those, I just want to go through, a little bit on me, right? So I have been in the real estate mortgage business for over 15 years. Kind of got my start before becoming a loan officer with a real estate investment firm. And what I really found about that firm, they were doing rental, they were doing flips, and they were doing some kind of rent to own seller financing.
Okay.
What I found that I really enjoyed the most was dealing with the people who were buying, the renters who had the option to buy, the people who were on a seller financing arrangement. And oftentimes they didn't have the credit worthiness to go to a traditional lender and get a loan. And we were helping them, and just the way that they were so thankful, the way that they were so grateful, and the way, honestly, the way they looked at homeownership when we were able to enter into a deal with them and eventually get them into, true ownership. It was just, I kind of fell in love with with the process. It made me feel good to go to work every day, right? So since then, fast forward about 2020. I went and got licensed to do this full time, to be my own loan originator. Been doing that for the last 5 years. And my company that I'm at now, Rate, used to be called Guaranteed Rate, has a wide variety of products geared primarily for first-time home buyers. Now, there's all kinds of buyers out there. There are people who want to buy again. Maybe they're not a first-time home buyer, but technically speaking, you're classified as a first-time home buyer if you have not owned a home for the last 3 years, right? So
Awesome.
it's kind of interesting, right?
Yeah, and one of the things, and guys, what he's going to touch on is I met Jon on a listing I have. I actually received a pre-approval letter, and I
That's right.
saw that I was talking to the agent about the offer, and when she was going through the offer, I was like, "Wait a minute, and you're not doing what? And you're not asking for this? Why is that?" And so when she told me, I'm like, "Really? So you're not asking for any closing costs? None of this?" And she was like, "No, Angelina, because we're getting it through our lender." And I
Right.
told her, I was like, "I need his contact information." And I need it now. And
Yeah.
so that's when we spoke. Well, of course, I had to talk to you about the letter, of course, the pre-approval, but we spent majority of the time talking about exactly what you're touching on now on these
Yeah.
programs. So I immediately told, like, I have to have you on. And guys, as always, if you're on live and you have questions, please put it in the chat. I'm going to also put Jon's contact information at the end of this segment. So that way, if you have any other questions, you definitely want to look to get pre-approval. Again, these resources are for the public. You do not have to. I would like for you to work with me. But if you currently have an agent and you're looking for and you need these resources, because a lot of people ask, can I call if I'm not your client? You can. You can call. It's all about getting the information out to the masses. All right. And so, Jon, I had some graphics that you gave to me. You just tell me when you want me to put them up there, and I'm going to let you take the show, sir.
Yeah, for sure. And again, we're talking about programs for first-time home buyers, but I do also want to say there are programs for all buyers out there, right?
Awesome.
Now, this particular presentation that Angelina is going to pull up is going to be geared towards your down payment assistance specifically. Now, when you hear first-time home buyer programs, that usually means we're doing some sort of down payment assistance, because honestly, in my experience, the biggest barrier to homeownership is that upfront cost. the average home, Angelina, what's the average price point in South Carolina today?
Oh, we're looking at about 250, 260.
250 to 260, right? So if you're doing either a 3% down conventional or a 3.5% down FHA loan, that's like $8,000 or $9,000.
It is.
But that's not all, because you still got the lender fee, you still have the attorney's fee, you still have the appraisal, you still have to pay for your homeowner's insurance, your tax escrows, your recording fees, et cetera, et cetera. So this is easily $10,000 to upwards of $15,000 in expenses. How are you going to cover that, right? Certainly you might have saved, and some people do, but most people don't have $15,000 sitting in the bank, I've discovered, right?
Yep.
So I'm going to go through a couple of the programs that we offer here at Guaranteed Rate, and go through some of the benefits of them, and we're gonna kind of go from the bottom of the barrel to the best, most like ideal option. Okay, so this first one is called Equity Aid. They are going to give you upwards of either 3.5% or 5% of your purchase price in down payment assistance. Okay, that means that if you're doing an FHA loan at 3.5%, we're covering that down payment. Now, you can either do a 5-year forgivable or you can do a 10-year repayable. The difference between a forgivable, which sounds better, right, than a 10-year repayable,
yes,
is the rate. The rate is the difference. So a forgivable, you're going to pay a lot higher interest rate. Repayable, the interest rate's lower. Why? Because you're actually paying back that loan over 10 years. So they don't need to go as high on the primary loan. Okay. This program is really key because the minimum credit worthiness score is only 620. All right. And it's also really a really ideal program for people who might have a little bit of some credit dings. There's a concept in this in the lending world where you can either become automatically approved through a desktop underwriting software program, or they require a manual review. And typically, if you're being manually reviewed by the underwriter, there's very few programs that give you down payment assistance in those situations. This is one that will do that. So that's kind of a unique feature that only, to my knowledge, only Rate has. So if you've got a few credit sins, but your credit is 620, this is a good program for you. All right, so let's go to the next one.
So if I could touch on, I'll say, so with a
Sure.
620, you can get an automatic desktop approval with this program, is what you were saying?
Yeah, so when we run the desktop underwriting software, sometimes we get an automatic approval, and that's ideal because then there's really no underwriter's decision. They just follow the criteria that approval spits out at us.
Okay.
However, sometimes because of maybe some recent lates, or because of an old collection or a series of collections, the system comes back and says, we want a manual review. We really want the underwriter to dig in on this client.
Gotcha.
And in those situations, there's almost no financing with down payment assistance available. In those situations, typically, you have to have all the money yourself, or maybe you get a gift. Maybe you get the seller to contribute some, but there's no outright down payment assistance in most situations when you're going manual. This Equity Aid program is unique in that it allows you to be a manual approval, to go through that manual underwrite, and still get down payment assistance to cover 3.5 upwards of 5% of the purchase price, and do that either in a forgivable situation after 5 years or repaid after 10. Does that make sense?
It does, and that's awesome. That's what I wanted you to touch back on. And guys, I mean, this right here is a game changer when you have that 620 and still able to get down payment assistance. And like he said, up to 5%. So now down payment assistance plus a little bit towards your closing costs. And then when you're with an agent, hopefully you're choosing me, preferably, we could be able to get the rest of that other negotiated in that's less out of your money, less money out of your pocket, so to speak, or less out of a gift. Can you still get it with this program?
That's right. Yes. Yes.
Okay. Awesome.
You sure can. So Equity Aid's a good one. Let's go to the next flyer there. So this is similar. Chenoa, they have a also a 620 minimum credit score. They have a repayable after 10 years. So you know, not as or the same essentially as the equity aid program. And I do have an error on this slide. It's actually the forgivable term is actually only 3 years, not 30. So forgive me on that. If you pay faithfully on this Chenoa program for 3 years, your second loan that helped you get the down payment assistance is forgiven after only 3 years.
Really?
So, yeah.
Okay, is that based upon, so I know you're going to talk about this other one. So that's a little bit better really than state housing, because state housing is going to be at least 10 years depending on your income, or 20.
That's right.
And this
state
is
state housing, I will say, and we'll talk about the state housing. There's some good reasons to go with the state housing program. But to have a second loan provided to help for cash to close, and it's forgiven after 3 years, that's crazy. I mean, that's a, now, you know, again, the rates are higher, and that's where the state housing program kind of wins out. They're pro. They have a longer forgivable period, but they have a much lower interest rate. So we just, you know, we look to the difference. There's also one thing that I should bring up here: debt to income ratio maximum, right? FHA allows us to go up to 55%, where rates are getting debt ratios often into the 50s. That's very common. So the state housing program maxes you out at 45%. So that's kind of a artificial reduction in your max purchasing range when you have to keep debt ratios below 45%. So oftentimes, again, we are going to cover the state housing program here in the next slide. But, you know, this is an analysis that's done really by me, and then, you know, bringing you into the fold about what's the right route, right? What's your exit strategy? What's your credit score? What's your debt to income ratio? And where do we want to be? Are we going for a 3-year forgivable? Are we going for a 5-year forgivable? Or, you know, this is our forever home, so we're going to go with our, you know, the state housing's 10-year or 15-year forgivable. So there's you know, different conversations that we need to have around this. Now let me pause real quick and just say this to those people out there who are not at 620 yet. That's okay. I'm not going to just say, oh, you're not 620. Call me when you are. That's not
no.
That's not how I work. I'm going to run a simulator that's going to tell me exactly what your score potential could be. All right. So if you come to me and you're 580, 590, 600, and we know we need down payment assistance, but our minimum is 620. That's the minimum score we need. Then I'm going to tell you, hey, do this, do these 5 steps, do these 3 things, pay these other things down, add an account that keeps things going positively. And in another month, in another 3 months, in another 6 months, you'll be there. Then we'll re-engage. And by the way, that's a free service. So I'm not charging you for that.
Let me change that. You see, I'm putting everything up here.
Yeah, I mean, just to while you're putting it up, just to mention again, free. We don't charge a fee for our application, and we do a soft pull at the app stage. So if you're worried about your credit and you're like, oh, I don't know, you know, hard pull's going to hurt me. It's done it in the past. Nothing to worry about. Soft pull of credit means the bureaus do not log an inquiry on your credit report. And that, in combination with a free credit simulator that I'll send to you and very detailed outline your steps, means to anyone who's dedicated to this process, they'll get there. And remember, I came out of a investment firm where we were working with people who weren't creditworthy, couldn't go get traditional loans right away. We were entering into these seller financing or rent to own agreements. And so I know how to get someone's score up. I've worked with people like this for 15 years.
And that's something, guys, I hope you're paying attention to that. We got a like too. I don't know if you can see that on your end, John, when you stated in regards to the credit simulator. You know, guys, he mentioned two things that's big. For one, with this program is that you're able to get into that higher debt to income ratio. And for those who don't understand what that means that you are able to basically qualify for a higher price point and still be able to utilize down payment assistance. And the fact that you say that you're willing to do a soft pull. So for all of you all that are scared to get that credit pull, because you're like, I worked so hard, guys, he's doing a soft pull so we can see what we need to do to get you ready. And the difference between that going to a credit repair person is that he's the actual lender. So the lender is going to tell you what you need to get qualified for the home loan. And if you stick to it, like he says, they'll provide us with a pre-approval letter, some down payment assistance, and also some other things that he has goodies that's on the next page that he's going to talk about. And next thing you know, you're in your home, guys. I mean, this is awesome. So we're doing these things because, guys, I know you're hearing about rates. People are so concerned about rates. Please look at all the options that are available for you. There's so many things that are available right now at this time for home ownership that it's amazing that you didn't see years ago. So take advantage of it. Okay, I just want to say that, John.
Well, and let me just add one other thing to this. You know, when it comes to credit, making the decision about who you go with to help you improve your credit, right? So there's two things that, you know, I want to just highlight out of this. Number one, if you're working with a lender and they're telling you they need to do a hard pull, they're living in the 1900s. That is not how it's done these days. And so the modern way of doing it is soft pull. But we take it even further. Most lenders, if they do a soft pull one or two bureaus. We pull all three.
Oh, really?
Soft pull all three. I don't know any other lender doing that.
All three of them?
All three.
Okay.
All three. And the reason why this is critical is because it's the middle score that's utilized. So you're always going to have a high, a low, and a middle, right? And we never know which one that's going to be. Well, if you're only pulling one or two bureaus, you might be missing out on a program. Our minimum credit score for down payment assistance is 620, right? Well, if you're only pulling two bureaus and they're both one's a 625 and one's a 615, how do you know if you qualify for the program? Unless you're pulling the other third, right? So that's a critical piece. Number one, work with a lender who's doing soft pulls. Work with a lender like Rate who's pulling all three bureaus soft. And then the other thing is credit repair. I don't want to denigrate credit repair companies out there. I'm sure there's a lot of good ones out there and they're doing good things. But I always tell people, if you're going to spend money, spend it on your debt. Spend it on either adding new debt to keep things positively rolling or taking care of your old debt. I'm not a big proponent of paying somebody else when that money you're paying them could just be going to improving your credit, right? And again, I'm not going to charge a fee for credit coaching, which is pretty much what I do. I lay out the plan, boom, boom, boom. You do this. Maybe it takes you 6 months. Maybe it takes you a year. Maybe it only took you 1 month. So that's how I operate. And you know, let's move on to the next slide so we can kind of take the next level of this. We hinted about the state housing program. So let's talk about it. One thing that happened this year is state housing decided we want to increase our credit rating. And it used to be 620. It was 620 forever. Guess what? In 2025, they decided they wanted to go 640. So, you know, it's a step up. Now, the down payment assistance is $10,000. And sometimes that's more, right? We talked about 3.5% of 250 being about 8 or 9. So 10,000 could be more. But also if you're buying, what if you're buying a $300,000 or $400,000 home? Then 10,000 is actually less than 3.5%, right? So, well, again, that's where the dialogue comes into play. what's the right program for you? What's your credit score? What's your debt to income ratio? How much do you need, right? That's where we're going to adjust and make sure we're making the right decision. This is a 15-year forgivable program, which means more than likely this is going to get paid back. So we have to decide, are you going to sell or refinance this home in 15 years? And no one knows the future, but you kind of know, right? If you're a young person, 24, 25, 26, buying a home, you're probably going to move in sometime in the next 15 years. Do you want to owe 10 grand back? Or do you want to go with the Chenoa programs forgiven after 3 years? These are just decisions we're going to make, you and I together, as we go through this program. Okay.
So a stat out there, guys, the average is that most people sell their homes within 7 to 10 years. And it's probably a little bit lower now. But just off that stat alone, you're going to have to pay that 10 grand back.
Yeah. Now, the upside to this program is the rates are the lowest out there. For all the programs that offer assistance, the rates are the lowest. And I'll give you an example. The average rate today is probably a 6.7, 6.8, maybe a 6.9. It depends on where your credit is. It's going to fall in that category today. All right. The state housing program, that actually the rates are down around 6.3, 6.4, 6.5. So you can see that's about 0.5% lower than where the market is. But they're kind of doing that on purpose, because what happens when rates drop to the 5s again? They eventually will. And you're going to want to refinance. But guess what? If you're on this program and you go to refinance, this $10,000 second loan gets recorded. You're going to owe it back unless you just stick with the 6.5 for the next, however long, 15 years, right? So this is a good program. I think mainly for people who are in that super low value range, maybe 100 to 200,000 purchase price, because you're getting more bang for your buck than just 3.5%, more bang for your buck than maybe just even 5%, and the rates are lower. So it is a little bit more affordable. Does that make sense?
It does. And do you guys also kind of, state has it too, that if they don't want the down payment, they may be able to still partake in the lower interest rate that's lower than that 6?
Even lower than that. Yes. I'm glad you brought that up. If you're able to successfully negotiate seller credits, or if you have some savings, or if you have a family member who's going to help gift you, so you don't really need the down payment assistance, you're not worried about the 10,000. The state actually offers a no down payment assistance loan, and instead of using that 10,000 that they would for the cash to close, they use it in the form of a rate buy down. When you buy your rate down, you're prepaying interest, and you're paying interest up front at closing to get a lower interest over time. So in the long run, you're paying less in interest, but in the short run, you pay a little bit more. That 10,000 in assistance is used to buy the rate down. You can get a 5.75 right now, a 5.75. When the market rate is 6.7, 6.8, or 6.9, you can be in the 5s. So that's a leg up. We could actually do this, Angelina, on a USDA loan.
I like that.
So think about this for a second. USDA is rural financing for a client who doesn't need to be in the metro, doesn't need to be in suburbia, can live in the country. Maybe they prefer that, right? And there's no down payment. It's 100% financing, okay? And we can get them a rate in the 5s, 5.75 with this program. And maybe they either come up with the cash to close that they need on the closing costs, or they negotiate some help with the seller. The seller pays a portion, if not all of it, some big portion of it. I got my most recent contract that I got, the seller was paying $8,000 in closing costs. More than enough to cover all the closing costs, right? So if you're going USDA and you got a seller paying $8,000, we can get you in the 5s and you have almost no out of pocket. The only thing you're paying is your earnest money, your inspections, your appraisal, right? So there's ways around this cash to close conundrum that we find, is our biggest hurdle to entry.
And I think that's something people don't think about, not just USDA, but VA too as well. With VA loans, they forget about you already have these other loans that are 100% financing that you can still be able to utilize the 10K towards to buy the rate down. Even if you have funds to help put it down, could you possibly buy it down even lower to whereas now you're lower than the 5.75, or do they have it to where they kind of stop you at a certain point?
They stop you. By the way, it goes up and down. I mean, a month ago it was 5.5.
Okay.
I think it was even 2 months ago, it was in the 5.3 range. So it adjusts with whatever the market is doing. Today it's 5.75, but it'll drop back down.
Okay.
And there are options to do a normal buy down as well, in conjunction with either Chenoa or equity aid. So if we're getting a lot in the form of seller credits, like maxing out seller credits,
okay.
Because oftentimes the seller can contribute way more than closing costs actually are, then that extra money you're negotiating, that Angelina is negotiating for you, we can use in the form of a rate buy down, maybe on that Chenoa program with the 3-year forgivable down payment assistance, right? So, and still get a rate in a reasonable range, where you can afford it. So yeah, again, it's a dialogue. It's where you are and what works best for you. Your situation is what we're gonna go for there.
And it makes me think about right now. You have some of these when you have you have the builder lenders that are telling you they can give this lower rate. But what I also am noticing is that they're getting tighter on their lending. And so a lot of times we've noticing where certain builders would allow certain financing, they're getting a little bit stricter. And so,
Yeah.
but if you go, the kicker is you still go through them so that way you can be able to get those closing costs to utilize with the program that Jon offers. And so now if you're able to use the Genoa system, not Genoa system, but their program, you have a down payment assistance along with whatever that builder is providing for closing costs. Now you're at the point to whereas if you have extra funds, you can either use that to buy that rate down a little bit with that system, or be able to put those funds in pocket so that way you don't have to worry about bringing them to the closing table. So I like that. It just gives you different ways to be able to get to the finish line, if that makes sense.
Yeah.
Awesome.
And I'll say you brought up a couple of things I want to just touch on. Number one, builders, right? The builder is developing a neighborhood. They are the seller, and they've got an in-house lender, right? So the first thing to note is the seller of the home can pay some of your closing costs, but they cannot pay your down payment.
No.
So while they could cover some things, they can offer some incentives to cover closing costs. They can't pay your down payment. So your down payment's your down payment. You got to cover that, or get a gift from a family member that can contribute, or you do a down payment assistance, right? That's kind of the whole point of that. The other thing you brought up was VA. I just want to touch on VA as well. Earlier this year, I think it was like 2-3 months ago, we just surpassed $65 million in lender fees waived for veterans. And what does that mean? So typically a lender charges a fee. They charge a fee for their service, for processing, underwriting, and funding your loan. Well, for veterans, we waive that fee. It's about a $1,650 savings. So that's a pretty big dollar amount if you think about it, from the standpoint of people are, scrounging in the couch for their cash to close money, right? Over the course of the life of Rate's history, they have now waived over $65 million. That's money that they're giving back to veterans who deserve it. So if you're a veteran and you're thinking about applying somewhere, maybe you have already applied somewhere, check your rate sheet. Are they charging you a fee? Because if they're charging you a fee, you should come to Rate. We're waiving veterans lender fees.
Yeah, and I didn't know that. And is that for their first time getting a home as using the VA loan, or if I have someone who's currently in a VA loan right now and they're wanting to sell to get another house? Is that okay?
And not only that, it's any VA loan ever. So if I'm refinancing a veteran, no fee.
I'm putting that in there too. I don't know if you can see my subtitles, but
I do. I love those subtitles. Keep them rolling. I'm definitely multitasking. That's great. Yeah, I mean, a VA loan is a great loan. and it's well deserved for people who have served in the military. And Ray just wants to give back, and so everything that we do is centered around how we can help a client get over the hump and qualify. And this is definitely, VA is a great loan, but there's others out there, and we can figure it out. So let's move on to the next one, because things start to get even better, right? Beyond state housing, we have what's called a community opportunity program. Now, the caveat to this, the whole point of community opportunity, right, is that there are certain underserved areas that need more loan activity. I mean, frankly speaking, there's a lot of loans being made in certain areas and not as many loans made in others, right? And so what we look to is the census tract to determine whether these areas qualify. But I can tell you this much: for Richland County, they almost all the census tracts qualify. Awesome. For these underserved areas. This community opportunity is 100% financing, just like USDA, except you don't have to be in the country. And just like VA, except you don't have to be in the military or have been a veteran. This is 100% financing. Now, the other kicker to this is there's no mortgage insurance.
I was just looking at that.
Now, you might be saying, what's mortgage insurance? It's not homeowners. You still need a homeowner's insurance policy to protect the home. Mortgage insurance is something lenders charge to offset risk in case of default. So that is a kind of a throwaway policy. I mean, to be honest, most people don't default. I think the default rate on a primary residence is like 1 or 2%. I mean, most people don't go into foreclosure these days. So it's really a wasted policy. So none of that is necessary here. No mortgage insurance. I do also want to clarify. This slide says 680 minimum FICO. So you can see we went from 620 to 640. Now we're to 680. You're like, wait a second, what happened to 660? We skipped from 640 to 680, right? Well, actually, what I need to add into the slide is, if you're in a rental right now, if you're paying a landlord or a management company in an apartment complex, and you can show me a 12-month clean rental history, we can do this loan at 660 instead of 680. Yep. So not everyone's renting. Some people are still living at home with mom and dad, or they've got a family situation. But that's a little caveat. You can see we're trying, right? You can see we're trying. A clean 12-month rental history gets you a 660 minimum on this program, 100% financing, no mortgage insurance. Now, here's the awesome thing about this, because again, even if it's 100% financing, so meaning no down payment, there's still closing costs to consider. You still have a lender's fee, you still have an attorney, you still have insurance costs, you still have a tax cost and a recording fee. This program comes with a $10,000 grant. This is not down payment assistance. This is not a 3-year or a 5-year or a 15-year forgivable. This is a grant. It's free money. It is forgiven day one. And that $10,000 can go towards any closing costs or just putting money down on the loan, right, on the purchase. So the last 5 people that I've taken through this program got a partial refund of their earnest money deposit at closing. They literally paid maybe $500 when all is said and done to buy a home.
And this is what me and the agent was talking about when we talked about the offer. And yeah. She's like, no, we're not asking. Because I was like, hey, I see that you're not asking for any closing costs. She's like, oh no, we got a $10,000 grant. We don't need the closing costs. I said, what? And I had already seen she had 100% finance. I said, so you have that along with this? She's like, yeah. And she's like, we don't need it. And I was like, I gotta call him. I was like, can you send me his? I think she told me, because matter of fact, she hadn't sent the pre-approval yet. Yeah. She just sent the offer, and I was asking for it And so before she sent the pre-approval, I was like, send me the number now.
Yeah.
Over.
Yeah.
Guys, this is amazing. 100% financing. And you also get 10 grand to go towards your closing costs. Guys, that gives you, we're heading into summertime. As you know, this is when everybody wants to move. This is when people are going to start pulling, kids are getting out of school. People are going to start putting more and more homes on the market. And also people are going to start moving more.
Yeah.
Now, if you're in that competitive price point, this is a game changer for you. I mean, it just is.
Yeah.
And
it really is.
Yeah.
It really, really is. And listen, you don't have to be someone who needs 100% financing to take care of this, to take advantage of this $10,000 grant. So if you're somebody who has some money to put down and you plan on putting money down, you can still get this grant. There are some qualifications. Again, you see the credit score. You see down here, we need at least 2 active trade lines of at least 12 months minimum, activity on those trade lines. So there's some things, again, we have to go through and make sure you qualify. First time home buyer home buyer education required for first time home buyers. So, things like that. And we'll go through those details. But this is an amazing program. And if you've done everything right, if you've really worked towards this, or if you're not sure, but you apply with me and then you follow my plan and we target next year, maybe, right? For this, there's no reason you shouldn't be able to be 680 by 2026 and take advantage of this program, right? So we're not going anywhere. I've been in this business for a very long time. I plan to be in this business for a very long time. I enjoy what I do. I like working with people. I know every person isn't going to be a buyer today. Some people are buyers in 3 months, 6 months, 12 months. We'll take care of you and we'll get you squared away. But if this is the program for you, we can get you there. We just might need to do a little bit of work.
So if I can ask you something with the $10,000 grant, and if you have someone who has their down payment, I'm assuming they're going to possibly do it. Let's say FHA, 3.5%.
Yeah.
Are they able to sometimes take this $10,000 grant if they have extra funds, buy the rate down as well?
Yes.
Or seeing with the
Yes.
grant, the rate is higher too, or is it they can do it? Okay.
I had a client use this grant. We bought their rate down. They were putting some money down too. So I think they were putting 3% down. We did a 3% conventional. They actually got a gift for the 3%. So it wasn't even their money. Their family chipped in that. And we did the buy down because the $10,000 was more than they needed for cash to close. And we were able to get their rate in the 5s.
Oh man.
Yep.
Now, and since this is a grant, if the rates drop, they're able to refinance. They don't have to worry about paying it back.
That's right. That is a great point. The one thing I will mention is because it's a grant and it's basically money in your pocket, it's like income. They are going to send you a 1099 at the end of the year to file with your next year's tax return, right? So, something to keep in mind. I mean, but shoot, that ain't nothing, right? I'll take that all day long if I'm getting into a home for very little money or no money down. Yeah.
Exactly. Go to your CPA. They probably could shelter it somewhere,
Yeah, your tax preparer will figure something out on that. I mean, it's $10,000. It's not a huge number when it comes to the tax season. Certainly worth, and probably the write-off on the mortgage insurance is going to be more than enough to cover that. So.
Yeah, and then if you're a business owner, you're definitely going to have some expenses that can cover all these things.
That's right.
You be able to use. So, guys, for everyone who's self-employed, which I'm sure they could do self-employed with these programs that you've gone shown us, come on, you can definitely take advantage of these things. It's wonderful information that you have given us, and guys, and this is all. So, just to clarify, all the programs that you've gone through today, they are not even for first-time home buyers. So if they haven't bought a property in the last 3 years, they can be able to not only get the down payment assistance, the 100% financing, as well as the grant that's available.
That's right.
Guys,
100% right. I mean, it's a misnomer to say first-time home buyer because they consider you a first-time home buyer if you don't have ownership in any home in the last 3 years. But you might have had a ownership in 2020. Mm-hmm. and you sold the home in 2021. Guess what? In 2025, you're a first-time home buyer again. So just little things of, pieces of information that people don't, it doesn't make sense, right? Why would I already owned a home? I shouldn't qualify. Yeah, you do. Listen, we want to make these loans. The community opportunity, there's a reason they're targeting certain communities. They want to make loans in these areas. So, it's just, we got to fit you in the guidelines.
Now, if someone has a home that they're owning and they're selling the home, so at the time that they do the closing, they will not have the home because they've already sold it off on that dual closing. Can they still qualify?
So in that case, since they were an owner and had ownership in the last 3 years,
okay,
certain restrictions, right? We would probably earmark them for like the equity aid or the Chenoa program where that doesn't matter.
Okay, so they'll be able to qualify for everything except for the grant base. Okay,
right.
That's awesome, to be able to do, because you have the $10,000 in down payment assistance that you could be able to get. Well, 3.5% and 5%, and then also the additional $10K with state housing that you could be able to qualify for.
That's right.
In other words, we got options.
We got options. That's really what this boils down to. Is taking a look at your situation and telling you your options and figuring out. Usually something stands out as this is the right way to go.
And guys, I know you probably like, Angelina, okay, you talk about all these options. Okay, there's John's contact, guys. I know that's what I want to make sure that you hear all the goodies, and this is why I have his contact down below, so that way you can reach out to him. And this is his personal cell phone number that I'm giving you all. So I'm not giving you a 100 line. This is his phone number that you can text, call, leave a message, as well as his email address. And you did have a QR code. I just didn't know how I could put that on there.
That's okay. Yeah, we can we can maybe do that on the next go round.
Yeah,
I'll screenshot you my QR code. But I will say too, so I text a lot with folks. Happy to do a phone call. You can email me some questions, but I actually am going to have, so my office is downtown Columbia at the corner of Park Street and Washington Street. And I'm doing a home buyer course this Saturday. And this will be an opportunity to be face-to-face, go through this presentation and talk about some additional things, answer questions. Some people might have unique questions that they, aren't sure about. What about my income? What about, my job history? What about, this unique, thing that I've gone through? I talked to a client today who, just their Chapter 13 bankruptcy was just discharged. Guess what? With a Chapter 13, we can move forward immediately. So just different things like that. I'm sure people have questions. So today, did you, Angelina, did you get the flyer for the home buyer course?
I did, and that is my fault. I'm going to save it right now to put it on. I just put it down at the bottom. Let me do this right now, guys. I want to show you all.
And while you're doing that, I'll just mention, so we're going to go through a lot of this stuff again, but it'll be all right if you're hearing it the second time, because I'm feeding you lunch. So it's a free lunch. Come on in and get some additional information, ask all your questions, and we'll break it all down for you. Okay.
All right, guys. Did y'all see the information? And I'm going to put yours. I'm going to still just put your information right there.
Yeah, absolutely.
So everybody, take a screenshot of this home buying seminar where you can meet with Jon Buerkert on Saturday, this Saturday. Yep. But you can meet him in person, and you guys will be taking applications while you're there.
Yeah. So the application process, let's talk about that for a split second, if you don't mind. The application process is super easy. It's like 10 minutes. We can do it online. We can literally do it right then and there. I have an app, so people who like to use their phone, app formatted for the phone, or will be in my office, so we can sit down. I can pull up my computer and we can type everything in manually. So absolutely. And we can talk about all the programs that you might qualify for and how to get you, in position to be, a buyer this summer.
So guys, there's no excuse. I I know everybody's going to be off on Friday and Saturday because Memorial on Monday. So if you're not going anywhere, you don't have anything to do, guys, go out there now. Here's his contact information. He's letting you know where it's at. He has a home buying seminar, and he's feeding you. So he's feeding so he's feeding you food as well as feeding your pockets, because he's there.
That's right.
Some money. He has a $10,000 grant that he's ready to get. They say they have to give away, guys. So go down there today and get call him. I don't know if he's working tonight, but you can definitely text and he'll call you tomorrow. But if he calls you tonight, hey, that's even better. So he's going to do a soft pull credit score on all three of your scores. So you don't even have to get a hard pull. He's going to do a soft pull on all three credit scores. They have the credit simulator. So if you're not ready now, and that's if you don't have a 620, guys, you don't have to have 700, 750, not even really, well, 680 for the grant, but for the other programs, 620 and 640. So there's no excuse not to call Jon today and to get
That's
this.
right.
All right. Jon.
And if you call me or text me or email me, I'll give you the address so we can, I just want to make sure I have a head count for, so I make sure I have enough food for everybody. Okay.
Awesome sauce. Jon, is there anything else that you would like to share? I appreciate you so much for giving your time this evening. Anything that you would like to touch on? We already got your seminar, your great programs that you would just like to share with anyone before we wrap it up this evening.
I have a heart for this, but also I have a heart for Columbia. I went to St. Andrews Middle School. I went to Columbia High School. I went to USC downtown. I've been in here in Columbia my entire life. So, I'm not going anywhere. This is my market. This is where I plan to stay and dominate. And, I hope to see you guys. We're going to be doing more of these seminars and hopefully maybe more of these live events, right, Angelina?
Yeah.
But yeah, I mean, we got to get the word out. We got to get the word out. There's plenty of money out there for people, and we can help people become homeowners and change lives. And that's the joy of the business.
Awesome. And Jon, as I tell everybody, you have an open invitation whenever you would like to come on. I have lenders that call me that when they have updated things like, hey, Angela, we got this new product. I need to let people know. You are more than welcome. Just call me, text me, say, hey, Angela, I need to get on.
Okay. Fair enough.
Yeah.
Fair enough.
Well,
okay.
God, thank you so much, everybody, for getting on and get this information. We try that when we do come on that we give you information. It's our purpose is to spread the word on home ownership. Guys, there's nothing more you can be able to do. Go out there and just get started. Even if you don't know what you need, he's going to tell you what you need. Just get started. We can get this information out here every day, but if you don't take the first step in calling someone, please just give us a call. Here's Jon's information. And if you do not have an agent that you're currently working with, please, that's my information at the bottom. That's my cell phone number as well as my email address. We're with the Deals with Angie team. We're here to serve. And Jon and I will get you in that next home and your future homes. The things that you do. Jon, we just had some information. Oh, we have someone. Okay, we have some people letting us know. It was very informative. Thank you so much, JD. We greatly appreciate it. Guys, if you were able to get on the back end of this, please know that all of these Tuesday tune-ins are streamed to Facebook page for Deals with Angie, Angelina McFadden, as well as LinkedIn, and also to catch all the Tuesday tune-ins so you don't have to scroll through social media, which I don't like doing. You can go to the YouTube. You can get all these Tuesday tune-ins at YouTube page. So that way, if you didn't get his information, we're going to put his information back on here. We'll put that back on. If you missed something that he talked about, it will be on YouTube, so you could go back and restream it and look at it, as well as I'll be sending a link. So Jon's going to put it on his page too, so you can be able to see it. But most importantly, you don't have to go back on there. You can just call the phone number, and he will tell you everything that he just went over. And get you
Absolutely.
All right. Well, Jon, thank you so much again for coming on. Guys, thank you for your time, as always, listening. And join us next time for the Tuesday tune-ins. All right, guys? And go to that.
Thanks, Angelina. Bye-bye.
Thank you.